Hello, everybody. This is Trader Max, and this is the DexFXMarkets.com Dex Atomic X series. And we're going to be talking about the medium risk process. Now, in our little input section here, there's low and high risk. So you're probably asking, Max, where's the medium risk button? It's in your brain. It's in your brain. It's in your gut. It's in your process of learning what the support and resistance areas are. And different will refer to as dynamic principle, right, for levels of price. In this process, we're going to look at where are some of the dynamic solutions here. Now, I can explain a little bit more of dynamic levels of support and resistance as the ability to see coincidences or levels or levels of attraction to a certain price area, okay? And so you have to begin to look. It is a very creative process, but it starts to make sense when you use the Hilt box as a reference guide. So what I do is that I look at each line as its own variant to decide whether or not I'm going to get into a trade at that level. So if I were to extend it back, right? I don't want to go back too far. I don't want to go back to the age of time, right? But I want to go back to where I know that there's movement at. If I don't have this movement, I may stay with the main lines and not do something in between. But within my Hilt box and a little bit further out, is there a possibility of a level shift in there? So let's look to see if there's one on this one. Well, since we're at a buy, I'm going to look at this right here. Now, this line right here and this line right here. Now, is that a medium risk trade? No, that's a high risk trade. Why? Because I've gone in to the trade. Remember rule about the low and high risk. When you're looking for a statement, the more you go into the trade, the more risk there is. So that one wouldn't work for me. So I would have to find something else. Now, where is the medium risk? Well, if this is low and this is high, somewhere in this first channel. So I'm looking for something that could be deciphered as a medium risk trade. But I can't seem to find one. Or can I? Remember, I don't want to go into the future. I can't really do that. If you're back testing, you don't want to go into the future at all. But I can kind of see something here. I see this little area, this little conglomeration of bars. I see this area is more of a head and shoulders area. That seems pretty strong. I see a couple pushes here and some in here. So somewhere in between the 75 and the 50 lies the medium risk trade at that level of 21.09. Well, wait a minute, Max. That's 21.09. Yes, that's true. Sometimes your medium risk trade, okay, is the same as your high risk trade on a level of pippage. Because if you have one that's only 2 pips wide, being right in the middle may be 1 pip, but being just above that may be the 1.5 pushes you into that trade. Because on Nadex, there isn't a splitting of a single pip. Okay, there's not a contract at 21.09 and at 21.09.5. Okay, so keep that in mind. That sometimes doing the extra work to find it, if it's only a couple pips wide, that could be where your starting point is to begin with. All right. Now, is there something that's more even of a lower risk trade? You could come down into these areas, but it doesn't really make the sense to do so. Let's go back and look at one of the cells and do the same thing. Now, why would I use a low risk or medium risk trade? Well, it'll kind of improve your chances from your from your low to your high risk trading system, but it also gives you an opportunity to see where these levels are really strong at. We can see that this high risk level is very, very strong. Okay, because we have it here, here, and here, right? If we extend that line out just a little bit, you'll immediately see that that's a pretty strong level. Now, if the market has already started to move against that trade to come back up into this area, we can then possibly use a medium risk trade. But there's really not too much there. I have this here. I got a couple here. I don't really have anything back over this way. I would have to go really super far, all the way over to here. And, oh, look at that. Kind of works, doesn't it? But you don't really want to do that all the time. Okay, so this would be something in between. So again, 70.57 to 70.62. This one in here is about 5 pips difference, so about 2 pips in between. So this could help you out and give you a little bit better advantage, or you could just split it all together and be the eighth mean, right? So if this is half, this is quarter, this would be eighth, okay? So you have this opportunity to use this medium risk mentality. But again, it's only going to work for you in this particular zone between the low and the high risk. All right. Well, at this time, I think I've explained everything I can about medium risk trading. You're going to be looking for those touches, how many touches it has. I try to stay between 2 and 3 during that time to give me a good feel. I have to look to see how well the price is being manipulated, how far it's going, how many pips are in between each deviation. There's a lot of things to consider. You could do so very quickly, but for the most part, if you've traded a lot with the DEX atomic system, trading with the in-between is not so bad, being at the middle. Low, patience, high, lots of activity, a little bit of losses, got to have a tough skin, all that kind of good stuff. All right, I'm Trader Max. This is DexFXMarkets.com. We're on the DEX Atomic X learning about the medium risk trades. We'll see you next time, and as always, trade well.